The software sector had its best day in 16 months on Thursday, up 7.74%.
And 10 of the 11 S&P sectors finished lower.
10 of 11 down, and the index still closed up 0.72%. One sector did all of it.
Which would be the story on most days. It is not quite the story today.
Because the same night that set software off also produced the largest semiconductor earnings report of this cycle.
Nvidia rose 8.74% on Thursday. It finished 19th. Quick note, this is education and entertainment, not investment advice. Companies are examples. Never buy or sell calls. Do your own research.
S&P 500, 7,730.99, up 72 hundredths. NASDAQ Composite, 26,541, up 1.57%.
Dow, 53,569, up 20 hundredths. Russell 2000, 3,014, up 28 hundredths.
VIX 1451, down 4.6%.
Software up 7.74. Technology up 3.16. Semiconductors up 3.1.
And then everything else. Energy down 22 hundredths. Financials down 65. Utilities down 76. Materials down 82. Industrials down 85.
Real estate down 95 hundredths. Communications down 1.07. Consumer discretionary down 1.09. Healthcare down 1.13. Staples down 1.38.
10 sectors lower, 1 higher. The 10-year finished at 4.67%, up a basis point.
So here's what actually happened. On Wednesday evening, 5 companies reported inside about 90 minutes of each other.
Nvidia, Salesforce, Okta, CrowdStrike, Synopsys.
All 5 filed their results on the 26th. Thursday was the day the market ranked them.
And that ranking is the most interesting thing on the tape, because it is not the one anybody would have written down in advance.
Of every name we track that traded on Thursday, 1,059 of them, Nvidia finished 19th.
18 names beat it. 15 of those 18 were software.
Okta up 28.63%. Salesforce up 22.58%. CrowdStrike up 20.58%.
Veeva up 15.2%. Synopsys up 13.39%. Figma up 13.28%. Palo Alto up 12.83%.
SailPoint, JFrog, Rubrik, SentinelOne, Atlassian, ServiceNow, Scalar, Fortinet. All of them ahead of Nvidia.
And there is a tighter pattern inside that. 7 of the 18 are security or identity. Okta, CrowdStrike, Palo Alto, SailPoint, SentinelOne, Scalar, Fortinet.
So this was narrower than software. The money went to a specific corner of it.
And none of that is because Nvidia disappointed. It is worth being precise about this.
Revenue $96.2 billion, up 106% from a year ago. Data center $89 billion, up 117%.
Gross margin 75.0%. Third quarter guided to $108 billion, plus or minus 2%.
With no China revenue assumed in it at all.
That is not a weak print. On most measures, it is the strongest quarter any semiconductor company has ever reported.
And it came 19th.
There is a second figure that puts Thursday in context, and it is the one we keep coming back to.
Nvidia rose 8.74% on Thursday. Over the last 63 trading days, call it 3 months, it is up 6.4%.
So Thursday's single session is larger than the entire quarter.
Which means going into Wednesday night, Nvidia was down about 2% over 3 months.
The biggest earnings report of the cycle got the stock back to roughly where it sat in May.
Now, 4 of the 5 reporters are on that leaderboard, but most of the names on it are not.
Veeva did not report. Figma did not report. Palo Alto did not report. SailPoint, JFrog, Rubrik, SentinelOne, Atlassian, Zscaler, Fortinet, none of them reported. ServiceNow
rose 10.04% on zero company news.
So a majority of the biggest moves on Thursday were in companies that said nothing at all.
That is a re-rating of a category, not a response to results.
Here's the test we ran on that. If the market were making a judgment about which software survives artificial intelligence, it would pay differently for different business models.
Seat-priced software, the ones that charge per user. So an AI agent replacing a worker removes a seat. ServiceNow, Adobe, Atlassian, HubSpot, Workday, Zoom, DocuSign. Up 7.10% as a group.
Consumption price software, the ones that charge for usage, where more automation means more usage. Snowflake, Datadog, MongoDB, Cloudflare, up 6.94%.
7.1 against 6.9.
Those are the same number. Whatever Thursday was, it was not the market deciding who wins.
Okta had the largest move on the board, so it is worth opening.
Non-GAAP earnings of $1.05 against 91 cents a year ago.
And from the company's own release, beginning in the first quarter of fiscal 2027, we are using a fixed, long-term projected non-GAAP tax rate of 21%. Through fiscal 2026, we used a tax rate of 26%.
Run the same net income at the old rate, and the $1.05 becomes about 98.5 cents.
So roughly 6.5 cents of that print is a tax assumption.
But here's the part that is real, and it is genuinely good. GAAP operating income went from $41 million to $107 million.
6% margin to 13%. That is real operating leverage, and it does justify a re-rating.
What it does not justify is the earnings headline. And one more thing from the same release. Third quarter current remaining performance obligation is guided to 11 to 12% growth, from 14 this quarter.
The forward booking number decelerates.
Salesforce we covered last night, and the number holds up under a second look. GAAP earnings per share up 119%, and income from operations of $2.331 billion against $2.332 billion a year ago.
Flat. The earnings growth came from a $2.6 billion gain on strategic investments.
CrowdStrike is a better quarter than that. Revenue $1.47 billion, up 26%. Record net new annual recurring revenue of $333 million, accelerating to 51%.
And they raised full-year net new ARR growth guidance by 630 basis points to 34%. Record operating cash flow of $530 million.
One thing to hold carefully, though. Alongside that, they report $2.29 billion of ARR from accounts that have adopted Falcon Flex, up 101%.
That is a measure of accounts that moved on to Flex, so it includes existing customers migrating. It is not all new spending, and the company does not split the two.
And then Synopsys, which is the one we would point to.
Non-GAAP earnings of $3.91, above the high end of its own prior guidance. Full-year earnings guidance raised to $15.07 at the midpoint.
And on the tax question, Synopsys uses a 3-year normalized non-GAAP rate of 18%, reconciled line by line to a GAAP effective rate of 20.2%.
So the non-GAAP rate sits near the GAAP rate rather than well below it.
One caveat we should give, because the headline invites it. Revenue growth of 42% is not organic. ANSYS is in both periods now.
Which is the rule that keeps coming up. It is not enough to check that a definition changed. You have to check which way it cuts.
And this did not start on Thursday. Over the last 63 days, Okta up 82.5%, Salesforce up 43%, CrowdStrike up 36%, Palantir up 30%, ServiceNow up 27%.
Now the other side of the same window. Oracle down 25.4%, Broadcom down 12.9%, Alphabet down 12.5%, Meta down 10.1%, AMD down 8%, Amazon down 6.5%.
Semiconductors down 4.5%. The S&P up 2.2%.
So, software has been replacing the artificial intelligence trade for 3 months. Thursday was not the start of it. Thursday was the session where it became impossible to miss.
And 2 more results landed Thursday evening after all of this.
Marvel, semiconductors, not software. Revenue $2.739 billion, up 37%, a record, and $39 million above the midpoint of its own guidance. Non-GAAP earnings of 94 cents.
Workday. 12-month subscription backlog of $9.034 billion, up 14%.
Though the total subscription backlog grew 8%, the near book is growing faster than the whole book.
Both were still trading when we recorded this, so we are not going to put a number on the reaction. Friday's closes will settle both.
Away from earnings. Initial jobless claims came in at 203,000, down 4,000 on the week.
Continuing claims, 1,778,000. The insured unemployment rate, 1.2%.
There is no labor market deterioration in that.
And July's PCE price index was 3.7% year over year, which brings you to the July meeting.
The Fed held 9-3. All 3 dissenters, Hammack, Kashkari, and Logan, voted to raise by a 0.25 point.
So the live question at the September meeting is whether they hike, not when they cut.
And the market spent Thursday buying the longest duration equities on the board.
4 things.
Friday's closes in Marvel and Workday. Both beat on the quarter. If both close lower, the market is telling you a beat is no longer sufficient at these prices. If they hold, Thursday's enthusiasm extends.
Friday, 10 a.m. Eastern, Warsh's first Jackson Hole keynote as chair. But the symposium theme is financial innovation and payments, not rates. So a market waiting for a rates message may not get one.
The September meeting. Watch the dissent count. 3 voting to hike was the July number. 4 would be a different committee.
And Okta's third quarter. The number that matters is current remaining performance obligation, guided to 11 or 12% from 14, not earnings per share.
Software had its best day in 16 months. On the same day, the strongest semiconductor quarter ever reported finished 19th on the board.
Most of the biggest movers reported nothing. Seat-priced and usage-priced software were paid the same. And of the 4 results that did land, one survives a close read without a caveat.
That is our read, not consensus. It is a real move, and it is not yet a settled one.
None of this is investment advice. We will see you tomorrow. That's a wrap. If this was useful, follow or subscribe for the next one, and tell us where we're wrong. Thanks for listening.